Hey, strategic wealth preservation investors, it's Chris Vermeulen from thetechnicaltraders.com with a quarterly report on the markets and precious metals in terms of equities and metals. Now, overall, long story short, I believe we're going to be going into one of these, which is a stage 4 decline, a bear market, a financial crisis, whatever you want to call it. We had the 2000 tech bubble, we had the financial crisis. Every time it's called something or based around something different, but it is actually the same thing. It is an economic cycle that has ran its course, run out of momentum, and the momentum of investors have herd psychology or herd mentality, and they all move and sell and panic at the same time and create these giant waves. So I believe we're coming into one of these big market resets, and during these times when precious metals do not do very well, but this points and sets us up for the ultimate opportunity going forward. So let's actually go and jump right over to gold real quick. Take a look at the chart of gold, and if we go to the monthly chart, it's important to understand the big cycles, the big price action here in play. Let me just clear some of this information out of here. Let me get rid of a couple moving averages. So if we were to take a look at what gold has done, now gold has entered and commodities entered a super cycle early 2000s. It then had a very nice run up and it traded sideways for a couple of years. Now, during the time we saw gold trading sideways, the stock market was ripping higher, taking off, huge gains. And then eventually, out of nowhere, we just started to see gold break out and run, had another big move. And this is when stocks started to struggle. We got into, in the stock market, what is called a stage 3 topping phase, which I'll show you here momentarily. And eventually, what this is telling us is gold is the global kind of hive mentality of what investors are feeling. And when the whole world gets nervous, they start to move into gold. They're worried stocks are going to fall. They're worried real estate is going to get bad. The currencies are going to collapse. So they get out of all of those and they move to physical gold as an asset and something different, separate, not connected to the rest of the market. And so they pile in here knowing the world knowing something's up. There's bubbles everywhere. And then we had a big correction in the stock market and it pulled gold down 34%, pulled silver down 61%. And when we go into one of these stage 4 declines, I'll show you, we're going to see precious metals get hit. But what is interesting and exciting is after we have one of these wipeouts, it creates a multi-year rally and one of the biggest legs to the upside. Now, we have had the same type of price action. We had a new super cycle start in 2019. We had a nice run up. It's now traded sideways for a couple of years, few years. And now we got gold running higher and we have bubbles everywhere. We got an AI bubble. We got a real estate bubble, equities bubble, you name it. Everything is overpriced, inflation, everything's crazy. And so the world has been moving in here. Now it's just waiting for this time where the market is going to correct. And, you know, we saw gold pull back about 34%. I believe we could see gold pull back somewhere 25, 35%, which will bring it right back into the middle of this area. This is going to act as support. It's also the highs from 2011. So we could see something very similar. And of course, if it does that, it is going to be the ultimate opportunity to get into precious metals because they'll be oversold, undervalued. That's what happens in a market reset is things just get sold off way below what they're worth. And then we usually see a very strong recovery and multi-years into this asset class after that. Now, what is interesting is if we take a Fibonacci extension move, which we can go from the low and we can take this high. This is a super cycle pattern. So what Fibonacci does, it tells us the momentum that the market has based on its this rally up and the strength of this pullback. We can gauge using Fibonacci theory how far price should go. And what I always use for every asset, not just gold, anything on any time frame, all this works exceptionally well. When price runs up to this 618 level, meaning price is extended up 618 of this first leg, if the market pauses and pulls back there for bars, then we almost always go up and hit this one, which is a 100% measured move, meaning this rally here and this rally here are the same. A bull flag pattern, a big pause, a big correction, whatever you want to call this is usually seen as a halfway point, and then you have the second half of that leg. So we have now pretty much hit that for gold. Silver, gold could go to about $27.50 from the looks of it. Silver might still squeeze up to about $34 an ounce. There's not a whole lot of upside left. And then I think we're going into a market correction and a reset, a recession, all this stuff. And then we're going to see gold eventually reset. And then we're going to have one of the last opportunities to completely kind of back the truck up, load the boat, and see a very big move up in the precious metals space. So silver is similar in terms of what they'll happen together around the same time. And if I was to show you the stage 4 analysis type of stuff, so if we take a look here, you can see there's 4 stages that all asset classes go through. It doesn't matter the time frame. There's always this chart pattern and there's stages. But when we're looking at the big picture, we are in a stage 3 right now. If we were to look at the majority of stocks, they've run up, they've sold down, and now they're kind of putting in this big sideways pause. And the SP 500 hybrid, if we look at the SP 500 equal weighted with the Russell 2000, and we look at so IWM and IWC, which are microcaps, we've had this big run up and this big blow off phase after COVID. And now we're seeing price in this consolidation coming back up for potentially a double top. And then we're going to potentially go down and go into a big stage 4 reset. And this is usually what happens. Usually when the market has some type of reset, it'll have that push up, it'll break down, it'll put in this little, these are baby little pullbacks, but these kind of stage 3 tops before we go into a bigger correction. We had the same over here back in 2007, 2008. The market pushed up, came down, had that pause, and then broke into a stage 4 decline. Now, these here were just market corrections. In the COVID one, I believe we were setting up for one already, but COVID kind of quickly accelerated it. And then we had all kinds of financial support to kick the market back into high gear. So it got masked. And I believe this is a real stage 3. So I believe we're going to see something like this where it drops, 40, 50+% on the overall equities markets. And when it sells off, we're going to see precious metals move down with it. And so when we look at, this type of stage analysis, we can go and take a look at the cycles here. And generally, we're going to see precious metals outperforming, specifically gold. Gold is the global kind of safe haven play. We tend to see energy stocks trading up near all-time highs and industrials. And if we were to look at the chart and go to energy stocks and we go way back in time here, you can see when we have major cycle highs back in 2008 financial crisis, energy stocks were highly valued over here as they went into a bigger correction as well as the economy was weakening through there. And now we're back up at these kind of nosebleed levels where energy stocks could sell off. And I believe crude oil could fall to about $40 to $50 a barrel fairly easily in the coming 6 months or so. So I think we could see a pretty good wipeout. And of course, energy stocks will get hit very hard with that. But right now they are trading up near highs. And the other is industrials. We've seen industrial stocks trading at all-time highs, outperforming the stock market. And whenever we see that happen, we generally see a major economic cycle change place, going from a bullish economy, strong for businesses, to a weakening one. And there's a whole bunch of different reasons for that. I won't get into it right now, but overall, this is a warning sign that some difficult times are coming. And one other one here, which I'm just going to drop down to the daily chart. Actually, the monthly would be good too. But you can see utilities have just screamed to the upside. And the last time we saw utilities have a huge scream to the upside that outperformed the stock market as much as they are right now, let me just go back here, was during COVID. We saw utility stocks just rip to the upside. And generally when the utilities dramatically outperform, which a lot of these actually, these peaks, it was actually outperforming the market, then we go into a big correction in the stock market. And utilities will always go down with the stock market. Stocks are not safe. So while this is a safe haven play and working right now, when we get into a bear market, this will get absolutely crushed going forward. So that's something to keep in mind too. Another warning kind of sign. Now, if we go take a look at silver real quick, just so we can cover that, and I will go to the monthly chart. Silver if we zoom in here, has put in a pretty nice base. It's been working its way up. Overall, it looks like it has potential to squeeze up roughly to about these highs. If we use a Fibonacci extension based on these patterns, it points to this level. So we could see silver still rally roughly 10, 12% and pop over the next, this is the monthly chart, over the next month or two. We might see precious metals continue to push a little bit higher. And if it does get up to those levels, definitely be aware that we're most likely getting very close to a significant top in most asset classes. And then we're going to see some type of pullback in the market. Who knows how far silver will pull back. And then eventually it's going to kickstart into the next major rally where silver goes absolutely parabolic, along with gold miners and probably uranium stocks and all kinds of junior penny stocks. Everything will take off when a new super cycle for equities takes place. We're not there yet, but I think it could happen next year at some point as things kind of work themselves out. So that's kind of where we are at the high level. Now, if the stock market is putting in a major bottom, like one asset class is topping, then generally there is another asset class carving out a major bottom, which are bonds. If we look at bonds, we've went from a rising interest rate environment, and now we've got this rounding formation. Bonds are starting to kind of break out. There's a couple of levels here that are very important for it to really break and start to extend. But if the economy weakens, the Fed's going to continue to lower rates. Falling rates means higher bond prices, and that's what we'll probably see. So bonds could actually become one of the better plays. If you don't take advantage of falling prices for stocks, bonds, being long bonds could be a good play over the next year or so as all this unfolds. So anyways, that is kind of what I see unfolding in a nutshell. And of course, one last quick look here on precious metals is the seasonality chart. We are, September through the first week or so of October, we tend to see gold do very well. And gold has been moving up, and we're getting into this point here where gold might weaken for, in a week or so and start to pull back a little bit to the end of the year, take a bit of a breather naturally. And of course, gold is pretty much at its target. Silver is too. I think both of them have some potential to have one more pop and squeeze up. I feel like we're we just had a little pullback in gold. I think we might see one more push up and silver have a nice pop. And then we might pull back. And then from there, we'll have to see if the stock market rolls over and elections, all that comes into play. We could see the stock market sell off. It'll pull gold down with it. And this seasonality chart won't really provide much more insight. But gold has been moving very nicely. It's hit our targets of 2650 and then 2700. Now we're looking for 2750 as our final target. And that goes back, 20 plus years, that chart pattern of where gold should go. So this is a very significant level on the gold chart when we're looking at it in terms of where should it go up to this green 100% measured move based on this 20 plus year chart pattern. Anyways, I'm Chris Vermeulen from thetechnicaltraders.com. If you want to get my ETF trades or learn what I do, go there. You can go to my YouTube channel, The Technical Traders, and you can follow some free video analysis. I cover the markets on a more granular level, daily 30-minute charts, if you really want to get the pulse of what the markets are doing each day. Anyways, take care. Bye-bye.